Welcome back to Not Your Father's Accountant. I'm Igor Tutelman, CPA and Managing Partner of Iota Finance. I'm here to bring you tax-saving tips without putting you to sleep. Today's topic is how to pay your kids through your business. If you're a parent and a business owner, this one is for you. And this strategy can save you thousands of dollars while also teaching your kids the value of a dollar. So here's what we're going to be covering today. Tax and non-tax reasons to pay your kids through your business. How to pay your kids under 18 versus over 18. LLCs, S Corps, C Corps, and the family management company strategy. Documentation and compliance, so the payroll rules you need to know. And a couple of examples of how this all comes into play and works for you. Plus, we've got some free resources for you, including our all-in-one guide with a sample contract, time tracker, and more. On that note, let's dive in. First, let's talk about why you'd pay your kids through your business. So there's two big reasons here: tax savings and life lessons. Let's start with my favorite, tax savings. So instead of paying yourself more income, higher income tax bracket, you can pay your kids and deduct it as a business expense. If your kid earns less than the standard deduction, which is $15,000 in 2025, they likely won't owe any federal income tax at all. And having earned income means that they can contribute to a Roth IRA and start setting themselves up for retirement from the day they're born. Now that's what I call a win-win. Now the non-tax benefits are going to be teaching your kids about work ethic, teaching them about budgeting, retirement, and investing while they're young. This is your chance to turn your business into a real-life classroom. But you can't just Venmo them or give them cash and call it a day. The IRS has rules, so let's break those down. How you pay your kids depends on their age. If they're under 18 and your business is a sole proprietorship or sole prop or a single member or multi-member LLC, you're not going to have to pay payroll taxes, so no FICA, Social Security, or Medicare on their wages. That's going to be a huge savings. Now, if they're over 18, you're going to need to withhold payroll taxes just like any other employee, but they're still going to benefit from lower overall income tax rates. This also applies if you're paying them through an S Corp or a C Corp, which we'll cover in a second. Here's a really practical tip though. For kids in college, for kids that are over 18, you can use this as a strategy to shift your income from your higher tax bracket to theirs. So it's going to reduce your overall family's total tax liability. Right? And they can still make money working through your business while they're a college student. Now, let's talk about business structure, because how you're set up here matters. If your business is a sole proprietorship or a single member LLC, easy, right? Like we just discussed, if you're paying a kid under 18, this is going to be the most straightforward method. This also applies to multi-member LLCs in most circumstances. Now, if you're an S Corp or a C Corp, you can consider creating a family management company. So instead of paying your kids directly from your S Corp or your C Corp, your operating business, you're going to pay the family management company, which is then going to pay your kids. This is going to simplify your payroll and make it easier to allocate wages across multiple family members. And this is also going to help you stay out of the IRS's eyes by clearly documenting the arrangement. And speaking of documentation, let's dig into compliance. Here's where things get real. Documentation. The IRS isn't going to take your word that your 10-year-old is earning $50 an hour invoicing your clients. Here's what you're going to need to do. One is run payroll. This is going to mean withholding taxes if you've got an S Corp or a C Corp or you're paying kids over 18, and filing payroll forms like W-2s and 1099. Two is documenting hours worked. Timesheets are critical here. Be specific about what tasks your kids are doing, whether that's stamping envelopes, filing files, modeling for promotional materials, or even social media management for your business. Three is pay reasonable wages. Don't pay your 8-year-old $100 an hour to sharpen pencils. The IRS is going to flag that faster than you can say audit me. And a bonus tip here, if your kids are contractors, they'll need a 1099, and you're going to need to make sure that they do file a tax return. Now, let's do a practical example. Let's say that you run a bakery and you're a single member LLC. Your 15-year-old helps out after school. You pay them $8,000 during the course of the year. That $8,000 is going to be a deductible expense for your business. And because it's under the standard deduction for your child, they're not going to owe any federal income tax. Now, let's shift and say that you run a digital marketing agency and you're an S Corp. You're still paying your child $8,000 a year for helping around the business. You're going to need to run payroll and withhold taxes on this $8,000. You're still going to get the deduction, and your overall tax savings will still make it worthwhile. Now, here's where it gets interesting. You can go and then set up a custodial Roth IRA with your child. The contribution limit for the year is $7,000. So they contribute $7,000 out of the $8,000 that they made, and that's going to grow tax-free. Now, that one $7,000 contribution, assuming that's the only one they make, and it's growing at 7% interest, that is going to become over $100,000 in 40 years. If they contribute $7,000 every year for 40 years, that'll become over $1.5 million in 40 years. They can use that tax-free for their first house purchase or for retirement. That's a huge amount of savings. So no matter the setup, the key is to plan ahead and then follow the rules. All right, let's recap. Paying your kids through your business is going to save you on taxes and teach them life skills. Kids under 18 can save you even more if you're an LLC or a sole proprietor. S Corps and C Corps require payroll taxes, but they still offer big savings. And documentation. Timesheets, payroll, and reasonable wages are non-negotiable. If you want to learn more about paying your kids, check out the links in the description for a more detailed guide and free resources on paying your kids. Now, if you found this helpful, like, subscribe, and hit that bell so you never miss a tax tip. And if you have any questions, drop them in the comments or email me at igor@notyourfathersaccountant.com. Thanks for watching, and remember, when it comes to taxes, there's always a smarter way. See you next time on Not Your Father's Accountant.